JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 23rd of August 2021. So welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. The content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So you have to check us out here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, guys. So the first one I'm going to pick up here is Nikkei 225. So last week I talked about this a lot, and basically last week we saw the idea working out nicely with what I was saying, that if we drop below this hurdle, this 27,385, my next target is around the psychological 27,000 mark, and as you can see, we managed to reach that, yes, and today we saw a bit of buying here again, and the Asian session kind of ended up nicely in positive territory, and is still ending up in nicely in positive territory. But again, let's see how all this is going to play out. For now, looking at this picture here on Nikkei, we saw the index pushing back above this this hurdle, this 27,385, and to be honest, we can probably get rid of it now because no longer needed. Let's focus on something else, and first of all, let me just reuse this highlighted territory. There we go, and I'm going to grab this and mark this 27,000 mark right here, which is also near the lowest point of, or should I say, the low, yep, that's correct, the lowest point of January of 2021, guys. So as you can see, last week we did overshoot that level, and we created a new low for this year, and after that we saw a bit of a reversal and a push back up. So now I would say that even if we could see a bit of a move higher here on Nikkei, we do have a bunch of obstacles, let's say, for the upside. If you want to aim for those higher levels, there are a bunch of obstacles that are in the way for now, so be very careful with that. And in a way, even if it pushes further here higher, then first of all, we do have this downside resistance line taken from the high of the 15th of June, which we'll keep an eye on. We'll keep a close eye on that one, and then we'll take it from there, of course. Looking at the picture here, for the upside, for example, well, certainly a break of this downside line would be needed first, and then probably we'll take it from there. I can see in the chat room here, Erica, good morning to you too. I hope you had a fantastic weekend. I hope everybody had a fantastic weekend, guys, and you're all now back and feeling fresh, back to the market. So yep, let's see what we can squeeze out of them. Now, like I said, that's the situation with Nikkei. If you were looking for the downside on Nikkei, then we'll probably just kind of wait for now, and at least wait for that drop below the psychological 27,000 territory, and then yes, we could consider maybe lower levels. Shanghai Composite also seeing a nice rebound here now. Probably some investors kind of took it as a good opportunity to take advantage of the slightly cheaper stocks here, so cheaper Chinese stocks, and yep, we're seeing that nice little recovery today. However, as you can see from the technical side, we're still below this upside line here, taken from the low of the 9th of March. We're still below this downside resistance line, taken from the high of the 28th of June. So in a way, and we're still actually below the 21-day EMA. So there are a few issues here, and another thing as well. I mean, maybe this is just me getting ahead of myself here, but let's see how this whole kind of formation right here will play out, because at the moment, if you're seeing this as well, I mean, this could potentially be maybe a possible head and shoulders pattern here, a small one, but again, if that's the case, still the break of the so-called neckline would be needed, and that's somewhere roughly around here, guys, yeah, and then this is roughly somewhere about around the 3,420 territory, but again, I'll pick up on that a little bit later. It's a little bit of a difficult one. The neckline is slightly on an incline here, or decline here, so yeah, for now. And another thing is, then again, it's not confirmed yet, so I mean, it still could push higher and ignore the whole kind of formation. So that's why we'll take a bit of a careful approach here. If we want to aim for the upside, well, I would rather actually stick to a break of this downside resistance line taken from the high of the 28th of June, and then go for the upside. Jumping into another index, and that's the German index DAX. The index managed to remain above that 21-day EMA, although it did pierce through it a few times last week. However, as you can see, it did its job. This 21-day EMA continued to provide support overall, and we saw the index kind of climbing back up. It's still ending the week in negative territory. However, if we take a look at the cash index right now, I think that the buyers are kind of back in the game. It seems like that, or could be back in the game, but yeah, we're seeing a further push north right now. So after that little recovery here on Friday, and now we're kind of back above this 15,851 territory. We're coming closer to this 15,961 zone. We're just currently slightly below it. And another thing here I need to get rid of is this upside support line. Let me just adjust everything very quickly. So something like this that we would need to keep an eye on for now. So just keep an eye on this little short-term downside resistance line taken from the all-time high, which was reached on the 13th of August. And if we break this downside line, then yes, higher levels could be met. But if we stay below it, then well, maybe we'll just have to wait and see, guys, on this one, because again, if this downside line somehow continues to do the job, then well, I mean, maybe a bit of a decline back down here towards the 21-day EMA again could be possible. The S&P 500 also had a beautiful reversal here on at the end of last week, so on Thursday and then Friday, yeah, so everything's kind of looking again quite interesting. And if you remember, guys, I talked about this last week, and not only about the S&P but also the Dow as well, and Nasdaq, and basically what I said, that keep your eyes on this upside line here on the S&P 500, which is taken from the low of the 4th of March, because in a way this move lower could have been seen as a temporary correction before another possible leg of buying. And as you can see, that's the reason why I kept saying that. And we're now seeing a good pushback of the, well, on Friday we saw a good pushback above the 21-day EMA. The cash index currently is trading at around 4,455 territory, so above Friday's close, and we're coming closer, slowly coming closer to the current all-time high near the 4,480 zone, which if gets broken, then certainly yes, this could open the door to some higher levels. This would confirm a forthcoming higher high, and well, the sky's the limit for that one again. Maybe then of course we'll aim for that psychological 4,500 level, and then we'll take it from there. Now, in terms of the downside, pretty straightforward. The break of this upside line and a drop below the 4,367-68 territory is required. The DXY here, the dollar index, and yep, we are seeing a bit of a decline here on the dollar index. I mean, the equities are pushing back up. Investors are jumping from the US dollar at the moment. However, looking at this technical picture, it seems that we might not be finished with the upside yet. If the either the 93.19 level here provides good support, or maybe at least if this upside support line taken from the low of the 4th of August does its job. So again, at the moment there is room for maybe a bit of a larger correction here to the downside. However, we'll keep a close eye on this whole territory, this whole potential support territory. If it does the job, then yes, a nice rebound might be possible. But if it breaks and then the price falls somewhere below this 92.80 territory, that's where it could become a little bit more interesting for a few more sellers. Now jumping into gold, did gap slightly to the upside here today, and most importantly, most interestingly, it pushed back above the 21-day EMA and continues to trade above that 21-day EMA. So in other words, we still have here we have a chance of maybe seeing a push higher. However, as I mentioned before, we have this downside line here taken from the the high of the 1st of June, which in a way could do its job, could provide resistance, and of course keep your eyes on this little hurdle here, the 1795-96 territory, marked by near the highest point of last week. If we clear that, then yes, like I said, we'll aim for this downside line, and if this downside line holds, then yes, another slide could be possible, and this is where we could aim for the 1771 zone or even below that slightly. For the upside, we need to see a break of this downside line, and then yep, we could consider some higher levels. A quick update on Wti Oil. So yep, a good result here, but this is what I was aiming for. If you remember, I talked about this 200-day EMA. I kept talking about it, and now let's see if we can get something like this here. So basically, the idea which I mentioned before, was that if we see a drop below the 65.11 territory, then yes, I'll aim for that 200-day EMA. I'll aim for that 61.58 zone, which is marked by the lowest point of May, if I'm not mistaken. There we go. Yep, that's correct. So now let's see if we can get a bit of a climb back up here. And yep, if we can maybe push a little bit higher. Let me just remove one of this line here. So so yeah, if we push a little bit higher here, but let's say struggle to push back above the 65.11 territory here, then yep, another slide like this could be possible. If you want to aim for the upside, well, I would like to see the daily candle body staying above this 65.11 territory, and then yes, we could go for a slightly larger recovery here, because don't forget that we are still trading below this downside line here, taken from the high of the 6th of July. But if we do climb above this 65.11 territory, then we would also break this downside line, taken this tentative downside resistance line, taken from the high of the 2nd of August. Bitcoin very quickly on down, so continues to trade higher. So the 48,069 level did its job and did provide good support. I've mentioned that one last week, and yep, we're now seeing a further move north. The next potential target here for me would be somewhere maybe around here, near this 51,512 zone. That's marked by the high of the 14th of May. Slightly above that, we do have this inside swing high near the 53,844. But again, let's go slowly on this one, step by step, and yeah, let's see if we can reach those levels. But my first target right now is the 51,512 territory right here, marked by the high of the 14th of May. For the downside, well, it's pretty straightforward thing here. Of course, it's a break of this upside line taken from the low of the 20th of July is needed. Now, jumping into a few pairs very quickly, Aud and Zd. So let me actually start fresh on this one. Let me get rid of all the lines just to see what kind of the slightly bigger picture here. So you have, as you can see, we came very close to, I think, here. Let me just put this one on the chart, not here, but right here. There we go. So that's when we've tested this month. I think this last week as well. Yep, that's correct. So we've tested the lowest point of November. No, that's December. Sorry, the lowest point of December of 2020, and yep, you can see that we found good support here. That's that level is around the 1.0418 territory, and yep, from here we had a bit of a rebound, push back towards the 21-day EMA, which did its job and did provide good resistance, and we drifted back down again. So in other words, if you're looking for a move lower, guys, then we'll certainly at least wait for a drop below this area right here, this lowest point of December, and then yes, we could start aiming for levels like the 1.0352 territory, or even slightly below that. Now, in terms of the upside on this one, now certainly we do have some downside lines here, and the first one which I will draw here is, of course, this one, this tentative medium-term tentative downside resistance line taken from the high of the 29th of March. Then we do have some other of these also tentative lines. So if you're looking for the upside, then probably the kind of slightly, maybe I would say, safer option here could be to wait for a push above the high of last week near the 1.0542 territory, and then yes, we could consider maybe a bit of a move, a bit of a larger correction to the upside, I would say. So yeah, keep that in mind. But at the moment, guys, I mean, the fact that we're still trading below this downside resistance line, so yes, they're leaning a little bit more towards the downside. However, a certain break of this territory here is still needed. USDCHF, very quickly on that one. So this one also needs to be updated, but I will just update, remove these lines here. And if you remember, last week I talked about this pair, and basically what I said that let's see if this pair is going to form something of a possible inverted head and shoulders pattern right here. And again, will that work out? Again, we'll just have to wait for a break of the so-called potential neckline here, which is roughly around the 0.9233 territory. If we do have that daily candle staying above it, then yes, we'll go for the upside. Last week I said that if this territory here, around the 0.9118, does its job and does provide good support, then yep, we might consider this idea as being this idea for a inverted head and shoulders pattern. But again, maybe it's too early to talk about that. Let's see how this is going to play out. I'm going to take a bit of a neutral stand on this one right now, because I would rather wait for a clear breakthrough one of these levels here, the ones that I have here on the chart, in order to consider kind of the next short-term directional move. So long story short, for the upside, I'm looking at this 0.9233 territory. For the downside, I'm looking for a break below the 0.9118 territory right here. GBP Aussie, very quickly on that one, and yep, here you can see that we had a very nice hold up here near this 1.9227 zone. We did overshoot it, of course, but still, nevertheless, it did provide good resistance. That's the high, the 12th of May of 2020, and yep, let's see if we can get a bit of a corrective move here lower. At the moment, it seems that the bulls and the bears are really trying to fight hard here. I mean, over who's going to dominate, at least in the short run. So far, I can see that the bears are winning. So, yep, let's see if they can drag this one a little bit lower here, and maybe go ahead and maybe retest the 1.8972 territory right here, marked by the highest point of July, and if they can retest it, and if that area can provide support, then yes, something like this might be possible. If it drops below this area and stays below this hurdle, below the highest point of July, then maybe we could go for a bit of a larger correction to the downside. Now, Euro Turkish Lira. Now, this is quite interesting because, again, like I said before, I do like to look at these slightly exotic pairs here. And one most important thing here is that the IDO did work out. The initial idea that I mentioned here, that if we drop below this 10.05 territory, somewhere around here, then my next target is the area near the lowest point of August, the current lowest point of August, near the 9.8540 level right here. We came very close to testing that area, but to be honest, we'll take that as an achievement because, again, it did find support near this area and reversed back down. So now what we're seeing here is maybe we could be getting ourselves a nice little descending triangle pattern, but again, if that's the case, then yes, certainly a break below the lower side of it would be needed. But again, it's not a very ideal descending triangle because we do have a bit of a gap right here. So that's why I'm gonna just for now just look at it as this level separately as a good support zone, this 9.8540. If we clear that, then my next target is the 200-day EMA. For the upside, pretty straightforward. We need to see a break of this downside line, and then yes, a move above somewhere maybe above this 10.05 territory might do the trick for a few more buyers. And finally, EURUSD. So yeah, we're seeing a nice little reversal here. Last week I talked about this idea where I said that if it reverses a little bit higher but finds resistance near the 1.1704 zone, then yep, another maybe decline could be possible. However, as you can see, it pushed last week on Friday. It did exactly that. However, today it pushed through this barrier, and now we can ignore this scenario, this idea, unless, of course, the daily candle, the body of the daily candle today stays somehow below this area again. But again, it's just let's see how this is going to play out. For now, I would say if you're looking for some upside, at least up until this downside line taken from the high of the 1st of June, then well, maybe just hang on here for a little bit and wait for a move somewhere above this 1.1754-55 territory right here, and then yes, we could consider maybe a bit of a larger correction here to the upside towards this downside line. But as I said, if you're looking for some downside on this one, well, probably the maybe slightly safer option here could be to wait for a drop below the low of last week near the 1.1664, and this way, yes, the pair would confirm a forthcoming lower low, and my next target will be this lowest point of November near the 2020, of course, near the 1.16 territory, and then we will take it from there, guys. So so basically that's it for this session, guys. I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, guys. Your views, your likes, I really do that. Your comments, yep. If you want to catch me tomorrow morning, as always, at my traders Espresso, that's 6 o'clock GMT time. For now, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. So thank you very much, and bye-bye.